Good morning, everyone. Welcome to the TradeStation Masterclass. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. For me, it's always a pleasure to be here to talk a little bit about TradeStation, our technology, some of the features of our trading platforms, and help you, do what you do best, which is trading the markets and analyze the markets. Before we get started in today's presentation, we're going to go through some disclosures and some important announcements and information. Today's presentation is all about strategy testing and strategy elements. We are going to be looking at a custom strategy called the moving average machine. And the reason for that is because we want to have the ability to test moving averages and determine, which type of moving average works best in which scenario. As I said before jumping into today's topic, let's go through some disclosures. Keep in mind that every symbol and idea that we talk about is for educational purposes only, that these are not recommendations of TradeStation. Also, that active trading is not suitable for everyone, and past historical performance is no guarantee of future results. Today, we're going to be looking at strategy performance reports, and it's very important that we realize that the fact that we look at a performance report that is profitable does not mean that the strategy will do the same thing going forward. So be cautious when you trade. If you need additional information on these disclosures, go to www.tradestation.com/important-information. All right, let's get started. I'm going to go over some basic information on moving averages, probably something that you already know, but it's always good to mention things as a refresher. First of all, smoothing effects of averages provide a more clear picture of price trend, eliminating some of the noise in the price data. I mean, that's the whole reason why we put a moving average on a chart, is to give us a smooth moving visual of where the prices are headed. There are three common methods of calculating moving averages: simple, weighted, and exponential. Although when you look at the list of studies inside of the TradeStation platform, we provide a little bit over a dozen different moving averages that you can use. In fact, there are so many that we have a class dedicated to just explaining the differences between all these different moving averages. But in general, the ones that are most known, or the ones that are most common, are the simple moving average, the weighted moving average, and the exponential moving average. Strategies in TradeStation can be created based on those averages. And we're going to take a look at not only strategies that are built into TradeStation, but also a strategy that is going to allow you to do some additional testing on the difference of these averages. When you use a one-line moving average, what you're looking for is for the price activity to cross over or to cross under that average. It's a very straightforward signal, and it's simple to understand. And that's the whole basis of the one-line moving average. We have that indicator inside of TradeStation. We also have a strategy that is based on that idea. And when you use a two-line moving average, what you're looking for is for the two lines to cross. Each one of these lines will be using a different parameter for the calculation, so they both will be different, and they'll cross each other as the price activity goes through. Signals are generated when these two lines cross. When the fast crosses above the slow, that's a bullish signal. And when the fast crosses below the slow, then that's a bearish signal. And as I said before, we have all these indicators inside of TradeStation, and we have all the strategies that go along with those signals. So you can take those out of the box, put them on a chart, and test the strategy performance. We're going to take a look at a couple of examples here. The difference between the averages, when you look at a simple moving average, is going to give the same weight to each one of the data points. I'm sure you're familiar with moving averages, but generally, they're based on the closing prices of the bar, although in TradeStation, you can change that. You can create an average of the highs or an average of the lows, or an average of any type of calculation within the bar. But generally or typically, the moving average is based on the closing prices at the bar. The simple moving average will take all those closing prices and divide them by the number of closing prices that exist. It'll give you a simple moving average. Now, a weighted moving average and an exponential moving average, and we put those together because they provide more weight to most recent data. It'll make sure that the more recent data is heavier in the calculation than the older data. A lot of times traders opt for these type of moving average because they're a little bit more responsive and they're not as lagging as the simple moving average. But of course, everything has its cons and pros. Having an indicator that is very responsive to newer data makes the moving average provide false signals when the prices are moving sideways because there's always a back and forth on those moving averages. When you're using a weighted average, there is a multiplication factor that is based on the length. If you want to know the details about the calculation, the easy language code is in there. You can open it and see the specifics on the calculation and the math behind the weighted average. But the way that the calculation is performed is different for the weighted average than it is on the exponential average. We're not here to explain or understand what the difference is, but there is a slight difference in the way that the two calculate. As a trader, when you look at the two averages and you put them on the chart, you have a visual understanding on which one moves faster than the other. And let's go ahead and take a look at those. I'm going to switch over here to my TradeStation platform just for a moment and show you how we can tell the difference. Let me remove the lines that are here and show you what I did this morning. This is a 60-minute chart of Home Depot. And what I'm going to do is I'm going to add the three different moving averages that we're going to analyze today. Studies, add study, and in the indicator tab, I can do a multiple selection by holding down the control key. Michael's sound is muted. I'm just looking here at the chat. It should come on automatically. So when he says, how do I enable audio? I'm not sure how we can help him, but hopefully he's already figured it out. Maybe the speakers are off or something. Okay, so as I said before, we are going to select the three moving average. Let's go ahead and select moving average one line. I'm going to scroll down a little bit. I see exponential right here, so I'm going to hold down the control key and select the moving average exponential, and then scroll a little bit more, and then select the moving average weighted. You can see that I've selected three moving averages, but you can see how extensive the list of moving averages is. We're just going to focus on this three. The custom strategy that I'm providing you today allows you to do testing on these three different moving averages and determine which one works best under certain circumstances. I'm going to click OK. And the three lines are thrown on the chart. I've made my lines a specific color so that I would be able to identify them. If you are in doubt about which one is which, you can click on the background of the chart, and this will give you a data tips window. And at the bottom of that data tips window, I see the colors in reference to the name of the study. You can see that the cyan line is my simple moving average. It doesn't have a qualifier. But then the red line is my exponential moving average, and the yellow line is my weighted average. And as you can see, there's a clear understanding on how these indicators behave. The cyan line is going to be a little bit more of a lagger than the other two. Why? Because it provides the same weight to every single data point. And when we saw the market activity, turn down since yesterday, that's the moving average that's taking the longest to respond. It is still pointing downward, but it didn't respond as fast as the other two. Out of the exponential and the weighted moving average, which one turned down faster? If we look at the data tips window, the red line is the one that is lowest. So that would be the exponential moving average. So out of the three, you would say that the exponential moving average is the most responsive to new data, not necessarily making it the better option, because that's why there's testing that we can do on the TradeStation chart to determine, which one of the moving averages would be a better option. Let me switch back here to my PowerPoint and complete some of the ideas that are here. Let's talk about the moving average machine, because it's important for us to be able to determine which moving average is the one that we want to use. A lot of times, you hear out there, exponentials are the way to go, but weighted are very similar to exponentials. So how do you determine between an exponential and a moving average? And not to discount, what a simple moving average is, but it's one of the oldest forms of moving averages and is used, in many places. Would a simple moving average work better than an exponential and a weighted, or vice versa? That's the type of testing that we're going to do today. Before we jump onto the moving average machine, let me give you an example. I'm going to add a strategy that is already built into TradeStation, and you can add it right from the get-go. I'm going to go here to add strategy, and I'm going to just select a moving average cross. This is the one that will just generate a signal based on the price crossing the moving average. I was going to do a test here, or a comparison between two strategies, but if you notice, I don't have a strategy on exponential. I don't think TradeStation designed a strategy on exponentials or weighted averages. And maybe that's the reason why we have this custom strategy that will allow you to do those tests. So let me go back to our strategy, or our moving average machine, and tell you all about it. What is it? What's the reason why we designed this strategy for you guys to test? Let me go back here into my PowerPoint and talk about the moving average machine. The first thing is that it allows you to test one-line or two-line strategies of any of the three types of moving averages. So you can see that on my chart that I was just looking at, we had one moving average of each. We had one simple, one weighted, and one exponential. But the strategy allows you not only to test just one line, but it also allows you to test two lines, meaning two simple moving averages, two exponential moving averages, and two weighted averages. Remember the difference between the two strategies. When you have just one line, we're looking for the price activity to cross above and to cross below that line. When you're using two lines, what you're looking for is for the two lines to cross. But at the same time, the moving average machine is going to allow you to mix and match types, meaning that you can use a simple average to enter and an exponential average to exit. Or you can use a weighted average to enter and use a simple moving average to exit, and use any type of combination between those different averages, because maybe, one type of moving average favors entries more than they do exits. And that's the idea here, for you to be able to mix types of moving average in one single strategy. The length and the type of moving average are all controlled using numeric inputs. Now, this is something really clever and really interesting of the TradeStation technology, because when you assign these types of moving averages to a numeric input, it allows you to do optimization on those values so that you can determine which one works best. And I'll show you, we'll walk through an example here and go over to optimization so you can see some of the things you can do in terms of analyzing performance. Let's talk about signals before we jump over here to the TradeStation platform. When we do a one-line moving average, the strategy ignores all settings for MA2 inputs. Once we go over to the strategy inputs, this will all make sense. And, we have inputs for two lines, for moving average 1 and moving average 2. But if you set the strategy to only use one line, then of course it's only going to look at the moving average 1 settings, and it'll ignore the settings for the moving average 2. For the long entries, again, we are going to reference the closing price of the bar. When we cross over the moving average, we're going to buy on the open of the next bar. And if the close crosses under that average, then we're going to go short on the open of the next bar. And the exit is when the strategy decides that it's going to reverse from a long to a short or from a short to a long. It happens automatically. If you are in a long trade and all of a sudden the strategy feels that you should go short, it'll exit your long trade and enter short. It happens automatically, and it's called a reversal strategy. So when you look at the strategy code, there's not going to be any syntax for exiting. It'll just use that reversal signal to exit your prior position. I haven't shared anything, Jim, but I'll share it right now. Thank you for reminding me. I was going to do that at the very beginning, and I forgot. So let me go ahead and copy this and share it with everyone here. All right, that link that I'm sending everyone has a zip folder, and the zip folder has the strategy, has an indicator, and it has a workspace that contains a chart with the indicator and the strategy already applied to it. When you use the same strategy, let's go back here to the PowerPoint. When you use the same strategy, but you're testing a two-line moving average, the long entries are generated when the short or the fast moving average crosses over the slow. And then you buy on the open of the next bar. The short entry is the same. When moving average crosses under moving average 2, then you sell short on the open of the next bar. And then the same as when you're using one line, the exits are when the strategy decides that it's going to go in the opposite direction, and it just closes your trade to go there. Let's talk a little bit about the inputs of the strategy. The first thing, oh, sorry about that. Thank you, Jim. I had, there we go. Everybody should see it now. I had sent, the prior link to only hosts and panelists, and then I sent it again. No, thank you, Jim. So let's go over some of the inputs. The first input is deciding whether you want to use a one-line strategy or a two-line strategy, meaning a one moving average or a two line moving average. All you need to do with that input is enter a 1 or a 2. If you're using one line, it's a 1. If you're using a 2, then it's a two-line moving average. That's why the name of the input is number of moving averages. That's what the abbreviation stands for. The next input is the type. What is the type of that moving average? At least, moving average 1. So the type is either 1 for simple, 2 for W, or 3, W would be weighted, or 3 for exponential. Depending on which type you need, you're going to have to enter the number 1, the number 2, or the number 3. Do not enter 1S or 2W because it won't recognize that. You just need to enter the number. 1 for simple, 2 for weighted, 3 for exponential. If the top input is set to 1, it'll ignore the settings for moving average 2. So once you determine, how many lines you need, you have to specify what moving average 1 is going to be, whether simple, weighted, or exponential, and then the length for moving average 1. Those are the 3 that you must provide. Now, the next 3 are only used if you've set the top one to 2. If you've set the top one to 2, meaning that you want to use 2 moving averages, you have to tell the indicator and the strategy what type that second moving average is going to be, whether simple, weighted, or exponential. And you also need to say what the length of that moving average 2 is going to be. So those are all the 6 different inputs that are in my strategy. the inputs for moving average 1 and then the inputs for moving average 2. Let's go and jump over here to my TradeStation platform and go over some of the things you can do. Let me remove some of the indicators here. These are just the ones that are supplied with the TradeStation platform. I have a workspace that I provided in that zip folder that it's the moving average machine. But let's go ahead and set it up before we even talk about the strategy. Let me disable the strategy here for a moment. Okay, and this workspace, and I'm going to disable account orders and positions. You see the dotted line going across at the top of my chart, which is a winning trade. But that was just a winning trade or a trade that I did on the simulator, that it doesn't mean anything on my strategies. Let me disable account orders and positions. The indicator that you see here on the screen is the moving average indicator. We always have an indicator that goes along with the strategy, and it allows us to see the visual of that indicator or strategy. Let me double click on that indicator and show you what the inputs look like. In the inputs, you're going to find similar inputs that you do in the strategy. First, we have to specify whether we want to use 1 line or 2 lines. Let's leave the 2 there. Then we have to specify what the type of the moving average is. I'm going to switch this to 1, meaning that I want to use a simple moving average. I'm going to use 20 and 50, just as it says here. So for the length of the moving average 1 and the length of the moving average 2. And I'm going to change the type of the 2 to 1. So we're using simple moving averages for both lines, one set to 20, the other one set to 50, and we're just going to click OK. And that's what it looks like. And you see how it shifts it a little bit, because I think when I hadn't changed it, it was set to 3. So you can see there's a shift in the calculation. All that is inside one single indicator. That way you don't have to have multiple indicators added to the chart like I did at the very beginning of the presentation. One single indicator will control all 3 types of moving averages. Then I'm going to go to the studies here and go to add strategy. Well, in this case, I already have the strategy applied. So I'm just going to go to edit strategy. See, the strategy is already there, the moving average machine. And I'm going to turn the status on. So I'm going to click on status. That turns the status on. And I'm going to click on customize. In the customize dialog, then we have access to the inputs. And you can see the inputs mimic the indicator exactly. We have to tell it how many moving averages we're using. I'm going to say 2. The indicators, the inputs do have to match between the indicator and the strategy so that the crossovers make sense. Otherwise, you're going to have strategy signals that don't align with the crossover. So you have to be careful about that. So I'm going to change the type here to 1. I'm going to do both to 1. And I'm going to leave the parameters here to 20 and 50. And just click OK. So now you can see that whenever there is a crossover to the top side, meaning the fast crosses above the slow, we have a long entry. That's the blue arrow. And when the opposite happens, when we have the fast moving below the slow, then we have a short entry. And that's going to reverse our long trade into a short trade. Now we can take a look at the strategy performance report and see how it performed on 1 year worth of data for Home Depot. I'm going to go to the data tab and go to the strategy performance report. And this is my report. I have a total net profit of about $4,400. That's if I combine my long trades with my short trades. I have a profit factor of 1.35, meaning that for every $1 that I lose, I make $1.35. There's 32 trades in 1 year. Not excited about that. 40% of the trades are profitable, which is pretty standard for a trend following strategy. We have the number of winning and losing trades. And we have other performance metrics here that allows us to, fine-tune the strategy and decide whether we want to stick with the strategy or not. This is concerning. Maximum consecutive losing trades. We have 5. A lot of times we have 2 consecutive losing trades and we start doubting our methodology and we say, am I doing things right? But having to suffer through 5 consecutive losing trades requires a strong stomach. So those are things that we usually like to look at, because if it happened historically, it's possible for it to happen again going forward. And if you're not able to tolerate 5 losing trades in a row, then maybe this is not the strategy for you. That's what we're trying to determine here, right? If we look at the performance graphs, then you can see how our equity curve, it's a little bit out of whack. We want to have a little bit more consistent results. We don't want to have these spikes and then have these drawdowns up here in our equity curve line. So the strategy performance report is going to help you analyze the performance of the strategy. But let's go back here to the summary. Let's create a mental picture of some of the things or some of the numbers that are here, like the 4,400 on the net profit, the 135 on the profit factor, and let's go and take a look at RENA index. RENA index here is 7.81. If you haven't heard of RENA index is sort of a valuation that is done on the strategy. RENA is an index that goes back decades. It was developed by a gentleman that named the index after his daughter, RENA. That's why it's called RENA index. The value itself, the 7.81, doesn't necessarily mean anything, but it's a measure of the strategy based on, and if you hover over RENA or click over RENA, it does tell you what the formula is. It takes the total net profit, takes the average drawdown and percent time in the market, and creates a score. This is a scoring that is provided to the strategy based on how much money you made, how much money or how much drawdown, how much risk is involved in the strategy, and how long you are in the market. The most time you are in the market, the riskier the strategy becomes. So those are 3 very important metrics, and the calculation of that metrics, of course, is going to throw that score to us. What we're looking for is for the number to increase. So let's take a mental picture, 7.81 on that RENA index and the numbers that are up here. What we're going to do now is we're going to change our indicators to exponential and the strategy to exponential. Just those 2 changes, and see what effect it has on the performance report. I'm going to double click on my indicator, change the type here to 3, and then just click OK. All right, so the indicator shifted. I'm going to do the same thing for the strategy. So I'm going to double click on one of the arrows, go here to the inputs, and I'm going to change the type of this average to exponential by switching that number to 3. Remember that you can switch that number between 1, 2, and 3 for simple, weighted, or exponential. I'm going to click OK, and then click on Close. So that shifts, the strategy a little bit. It didn't do a drastic change because we're still looking at moving averages. So the the basic concept of strategy signals is the same. We're looking at the crossovers. It's just a slight different calculation. So how did that affect the performance report? Let's go back in here. So notice that we have less profit. So from 4,400, we're down to 4,100. The profit factor increased a little bit. We are at 1.37. It's just a couple pennies. It didn't increase much. So I wouldn't call that a big change. But at least we do see a change. The percent profitable went down from 40%. The total number of trades, I think, remained the same. And if we look at the RENA index, then we have an 8.86. So a very slight change to the upside in terms of scoring, even though we do have a lower net profit. But maybe, you're less time in the market, or the drawdowns are not as big as when you do a simple average. All those things, have an effect on the way that the strategy performs. I'm not, debating, where I'm not here or arguing that one is better than the other, because that's something that you need to determine on your own. But at least, this gives you the tools to compare the performance of one moving average against the other. Not only that, but let's go ahead and take this one step further. I'm going to optimize the strategy and show you the different things you can do. Because as I mentioned earlier, one of the things that this strategy allows you to do, and the indicator allows you to do that as well, is that it allows you to mix and match different types of moving averages, because you can enter the market with one type and then exit the market with another type. You don't have to stick to just one type. A lot of times we design strategies and say, I'm just going to stick to exponential moving averages. But what if this combination between exponential and weighted or exponential and simple makes a difference in your strategy? In this particular case, you can use optimization to determine, which moving averages are performing better than others on this particular historical backtest, if I may say. So what I can do is, first of all, optimize whether I want to use one average or two averages. And I'm just going to click on optimize over here. And this is the way that you set up your optimization to determine that. You start at 1 and you end at 2 with an increment of 1. There's no other way to optimize this, by the way, because what the strategy is looking for is either a 1 or a 2, right? 1 for one line or 2 for two lines. So you're going to start at 1. So it's going to test one line, moving average. And then you're going to jump to 2 because the increment is 2. So from 1 is going to jump to 2. And that's it. It's going to, test those two numbers and tell you which one performed better. I'm just going to click OK here. And then the types here. The types, yes. Now the types go from 1, 2, or 3. So let me optimize this. And I'm going to start at 1, stop at 3, because that's the highest, in increments of 1. So now it's going to test 1, 2, and 3. Does that make sense? I'm going to do that also for this type over here, optimize, and do the same thing from 1 to 3 in increments of 1, and then just click OK. In addition to that, I can also optimize the length of the moving average. The fast right here is 20. The slow is 50. You can make it anything that you want to test. But if you optimize, of course, you can set a range. And I can say, for the fast average, go from 1 to 10 in increments of 5. Doesn't have to be 2. Doesn't have to be 5. You can do 1 if you want. What I'm trying to avoid is having an extensive backtest or an extensive optimization that is going to hang us up here for hours. Some optimizations may even take days depending on the number of tests that you're running. So here I'm just going to test 10 to 30. So it's going to test 10, 15, 20, 25, and 30. And I'm going to do the same thing here for the slow. I'm going to optimize. And for this, I'm going to go to 30, maybe all the way to 100, an increment of 5. Let's click OK. This is a good warning that I'm getting here because it'll help me show you how to circumvent this. One of the averages that we're specifying right now, or at least, in the optimization that we are setting, we are going above what the strategy uses as a default. The strategy uses 50 bars by default. So anything or any parameter that is below 50 is going to be fine. But right here, when we set up our strategy optimization range, we said, go ahead and test from 30 all the way to 100. Now, of course, 100 is past that 50 threshold. So it's going to ask me this. The optimized values you have entered for the selected input may be too large for the current max bars back setting. That's what the setting is called, max bars back. Would you like to continue with the current input optimization range? I'm going to say yes, but I do have to take into account what the max bars back setting is and how can I adjust it. Otherwise, I will get an error. So I'm going to click on yes here because I do want to continue, but I have to do something else before I run this optimization. I'm going to click OK here. And I need to go up here to where it says properties for all. And on the properties for all, there is a setting here that says maximum number of bars study will reference. Max bars back. That's why it uses that name. It doesn't use a name here, but that's what the abbreviation means, the maximum number of bars the study will reference. Right now it's set to 75. So when it reaches to that level that it needs to test, 80, 85, or 90, it won't be able to because this is the maximum that it'll use. So I have to make sure that I have at least the maximum number of bars that the study needs in order to calculate. I'm going to set that to 100 so that the strategy doesn't get blocked. I'm going to click OK. And all I need to do now is optimize. Take a look at the test count. Is not, something, is not something big. 1,350. I think my computer will run that very quickly. But I've seen, some tests going into the millions. If you start, adding a little bit more granularity to your parameter ranges, like instead of saying, because we have like 30 to 100 using increments of 5. If you set that to 1, that is giving you a little bit more detail in that stepping process. Let me click optimize. This runs. You can see that in 5 seconds, my strategy came back. Now my strategy came back, but the indicator did not update accordingly. Why? Because those are two separate things, the strategy and the indicator. If you want to find what the strategy set the parameters to, you can look up here, of course, in the status line, or you can go inside the strategy. Whichever way you want to do that, that's fine. Let's go ahead and double click the strategy and see what it found. Take a look. It found that using one moving average works better for Home Depot. It also found that using the weighted average so one moving average using weighted and using a length of 30. That's what it found to have the best result. Remember that when you have this top input set to 1, it ignores the other parameters. So now it's not even using a 2-line moving average. It determined that a weighted moving average for Home Depot set at a 30 time frame would have given us better results. Another thing you can do is going into the optimization report. It's available to anyone that runs an optimization. By the way, the strategy optimization is usually grayed out. It's not until you run an optimization that you have that option to look at. But let me go here to strategy optimization report, maximize this, and make you dizzy with all these numbers. But this is what measured the performance of the strategy, and this is why I determined that 1-line moving average was the best option. This is sorted by the test number, as you can see the little triangle here, but I can sort by net profit. I double click on net profit, and you can see that it's sorted in descending order. And you can see the inputs that are selected by this strategy are highlighted in gray. So row number 2 is what was selected for my strategy. The performance or the net profit here is 13,000. From 4,400 that we were in by using a 2-line moving average, we're up to 13,000. Of course, I'm not saying that this made the strategy better. What this did is it looked at all the historical back tests and it found, all the optimal entries and exits that the strategy would have generated. Anybody can do that. You can sit there and look at historical data and say, I want to enter here at a very low price and I want to exit here at a very high price. And that would have given me an optimal trade, a perfect trade, if I may say so. But that's only by looking at the historical data, which is what the strategy is doing. It's massaging the strategy to fit the price movement historically. So you have to take the results with a grain of salt and do some additional analysis so that this helps you determine what's best for a particular symbol. So just wanted to throw that out there because it's important that we are aware of the flaws of optimization and that we use it as a tool that can help us and not something that deceives us. Okay, so let's take a look at some other combinations here, because if you look at the first column here, this is what the strategy did. The strategy optimization is going to save the best 200 results. And if you notice, all the 200, I'm scrolling down, by the way, but all the 200 and plus results are using just 1 line. It seems like 1 line was the way to go with Home Depot for the past year on a 60-minute chart. Of course, if I can go back here to my TradeStation, let me close my optimization report, I have to, let me go back and look at it again. I don't have to look at it. Look at the status line here. Notice that one line weighted 30. Let me go ahead and change the indicator. I'm going to double click on the indicator now. I'm going to set it to the same thing. 1, 2, which is weighted, and then set to 30. When you do that and click OK, notice how the indicator drops the second moving average because it's not using it anymore and just focuses on 1. So when the price activity crosses above the average, it goes long. When it crosses below the average, it goes short. Now, if I go back to the strategy performance report now, we're looking at the same numbers that the optimization pointed out. We have a total net profit of 13,000, a profit factor of 1.71. We have far more trades than we did before. Before, I think we had 32 trades and we have 127 because the strategy is a little bit more active when there is consolidation because there's always back and forth over that line. And if we scroll down, our arena index or the scoring is up to 45. So the risk reward ratio of this strategy is not as big as when you were using the 2-line moving averages. The performance graphs still need a little bit of work. Notice that at one point over here, we were making $4,400 and the drawdown dropped us to 900. So that was a big drop in our equity. But that is all what this is all about. It just gives you the ability to do the testing and do all the performance measures to be able to determine which strategy works best or works better than the other. Now, let's go ahead and take a look at something. I wanted to show you something else, and I just went blank here. By the way, I don't see any questions in the chat. So if you have any questions about the strategy, please let me know. Any questions about the workspace, please let me know. But this is just a simple way for us to look at different moving averages and do the additional testing to determine what works better for what symbol and under which market conditions. By the way, this is a 60-minute chart of Home Depot going back 1 year. The zip folder that I'm sharing with everyone has, of course, the strategy. It has the indicator, and it also has the workspace with a chart with the indicator and strategy applied. You don't necessarily, you don't need the workspace. I just added it there just in case you wanted to open it up with the strategy and indicator applied. But you can just import the indicator and strategy and create the workspace yourself. So feel free to do that. His question is, on this chart, you have a weighted average crossing over an average. What is that average line? In this case, Scott, when we set the strategy or the indicator to just one line, it's not looking at a crossover between two lines. It's just looking at the crossover of the closing price of the candle over that line. So the trigger is when the closing price of the candle crosses over and crosses below that moving average. When you set the strategy and the indicator to use two lines, then that's when it's looking at the crossover between the two lines, right? In this case, in this example we're looking at right now, this is just one moving average set to a weighted calculation, and it's looking at the closing prices crossing over and under, okay? It is a moving average crossover, but it's looking at the crossing of the closing price over and under the average. When you look at a two-line crossover, that's when the two lines cross over the two moving averages. Yes. For any other questions about the content, please email me, education@tradestation.com. I'll respond to those emails as they come. I usually am very, I'm doing these classes or creating content. So if I don't respond immediately, please don't feel that I'm ignoring you, okay? Have a wonderful day. Thank you for your support, and I hope to see you in one of my future classes. Remember to check out our events calendar. We have some great options education. If you're an options trader, I believe tomorrow we're going to have a session on condors and butterflies. So make sure you join us. I think the session's at 2 p.m. and we have a guest speaker that is going to show us some good things about how to trade or how to implement those strategies. All right, everyone, have a wonderful day, and I'll see everyone in my next class. Goodbye, everyone.